Last week was our first playoff game, and my plaque psoriasis was so itchy under all my gear. Sometimes just thinking about scratching could take me out of the moment. And then my doctor told me I could get clearer skin with a pill called Otezla.
Otezla Apremilast is a prescription medicine used to treat adult patients with plaque psoriasis for whom phototherapy or systemic therapy is appropriate. Otezla can help you get clearer skin after just 4 months.
Okay, ready for the next game. Talking to my doctor about a pill was a total game changer.
Don't use Otezla if you're allergic to it. Get medical help right away if you have trouble breathing or swallowing, swelling of the face, lips, tongue, throat, or arms. Severe diarrhea, nausea or vomiting, depression, suicidal thoughts, or weight loss can happen. Tell your doctor if any of these occur and if you have a history of depression or suicidal thoughts. Live in the moment. Ask your doctor about Otezla. Call 1-844-4-OTEZLA or visit Otezla.com for prescribing info about cost, and more.
Reality radio for a really great future. We're talking real money.
If you're a regular listener to the show, you probably memorized our phone number. But because Tom hasn't, I'm going to give it to you again. Here we go. 855-935-TALK. 855-935-8255. Hello and welcome to the show about your dough, talking real money on the radio and then later online as a podcast. I'm Don. Over there is Tom. Tom?
I was going to be so nice to you today, too, because tomorrow's your birthday, but all bets are now off. So the gloves are pulled off, and here we go.
I don't think I could take a day of you being nice to me.
Okay.
I wouldn't know what to do.
You know what? Here's the good news. I will not call you at all tomorrow. How about that?
I won't know what to do.
I know, exactly. Get up, go work.
You call me every day.
Won't complain about soccer, et cetera, et cetera. So there you go. Got that going for you.
Is your favorite team playing today?
They are. They just got a goal. They're back in it. So
the Mexicans?
They are. They're already through to the next round. Let's not go there. Yeah, let's not go there.
Oh, okay.
Yeah, it's a long story, but
Tom doesn't like the Mexican team. I was rooting for him, and I got chewed out. For rooting
There
for
are
him.
good and known reasons for that dislike, too, by the way.
I know who to root for in the World Cup if the U.S. isn't in it.
You pick a team. Yeah, I'm wearing my U.S.
I did.
jersey
I
anyway.
picked the wrong one, apparently.
You can still root for the Mex. I'm not going to stop you. I just
you
don't think it's good because they've been a very difficult opponent.
Yeah, I know. It's that header that you didn't like in 2002. Do you hold a grudge?
That's like yesterday.
Do you hold a grudge?
Only for 16 years or whatever.
I don't want to get on your bad side.
That's a long time.
I get on your bad side in 2018, and I'm 87 years old. Still hate that Don McDonald. I don't know. He headbutted me.
Yeah. Well, you got a deal like that you're going to talk about right now anyway, right?
Oh, yeah. I'm going to headbutt somebody.
Yeah. Whambo.
And you know what? He apparently, although he does seem to take it a little personally.
Oh, boy, does he ever. Yeah.
Man, he takes it personally. And who am I talking about, my friends? The most popular money-oriented radio show ever in the history of radio shows. Not the Don McDonald Show.
That's
darn
close number 2, though.
Yeah.
All right. Well,
number 17.
All right, whatever. It's still in the top 20.
Number 1, with a bullet, has been the Dave Ramsey Show because of his folksy, down-home approach to things from Tennessee.
Yeah, it's got kind of a religious part to it as well, right?
Yeah,
a little bit
and his debt advice is like, get your stupid self out of debt. We're going to talk about debt a little later on.
Which is a good idea. That's great advice, by the way.
But then Dave has this issue, and this came to us. I decided to do this after receiving an email from a listener in Minnesota. From Van in Minnesota.
Do you know he said it that way, even though it was an email? You knew you could hear the accent?
Yeah, because you can see the accent.
Minnesota, okay.
I've listened to Don since the 90s and got to meet him in his Disney World studio in 95.
In his Mickey Mouse costume.
Yes, indeed.
Nice.
No, I actually wore the Scrooge McDuck costume.
I believe that.
I found your podcast in recent years and listen when I get the chance. I seldom listen to Dave Ramsey, but happen to hear him discuss investing in managed mutual funds versus an index fund. And then he gave me the podcast. He said, I pretty much disagree with all of his comments, except his final one where he says a person's wealth is determined more on their rate of saving than their rate of return, which we'll also talk about.
Yeah.
So he said, would you take a listen and talk about it on the show? So I did. And Dave is still going on about his opinion that stock-oriented mutual funds yield 12%, that the best stock funds to get are actively managed full commission funds from a stockbroker, and he really takes issue with all of us on the radio, all of the CFPs and the like who criticize him, all of the press. I mean, he's been criticized by Time Magazine, by Forbes Magazine, and he really, really takes umbrage with that. Can I hear him? How come I'm not hearing him?
3 years that it's been open, 15 of them are down years and the rest are up.
Oh, wait. Here it is. How do I turn the volume up?
Ramsey says you can get 12%. Dave Ramsey's lost his mind.
Anyway, that's Dave Ramsey making strange seal noises.
That sounded like a seal.
Dave Ramsey's lost his mind. And Dave Ramsey, I believe that when it comes to investing, Dave Ramsey has not lost his mind. He is just a shrewd businessman. It is in Dave Ramsey's best interest to continue to push actively managed funds sold by stockbrokers, because stockbrokers pay him big bucks to be a part of his stockbroker network that used to be called Endorsed Local Providers. But he had to change that because the SEC was going to fine him.
Well, because he wasn't registered.
Right.
You can't take a fee for giving financial advice. Yeah, they work their way around that. Now I think they just they each pay him a certain amount per year or something to be part of the deal. So he changed.
Yeah, but here's what he said on this show. He went on and on and on and on about two mutual funds that he owns, both from the American Funds Company, which, by the way, when it comes to actively managed loaded mutual funds, it doesn't get much better than them. But here's what is wrong with his logic. And we'll tell you more about it after this. 855-935-TALK is the phone number, 855-935-8255. Give us a call.
Tom and Don are talking real money.
If you're looking for a nice short podcast to tide you over between episodes of Talking Real Money, check out Money 30. Money 30 podcasts are between 2 and 4 minutes long, and they're available at every major podcast service, including Apple Podcasts, or you can visit money30.com.
Your guides to a really great financial future. Tom and Don are talking real money.
855-935-TALK. That's our phone number, and you can call us almost any time because it either goes to voicemail or it comes right to one of the shows. 855-935-8255. We're talking about the most popular money talk show host on the radio, Mr. Dave Ramsey.
In history.
In history, yeah. Yes. He really does have a big, big audience. And when it comes to debt, we're good. And, that's one of his little whines. He goes, well, Dave's fine with debt, but he's a terrible investment advice. Terrible.
Didn't sound like him. He'd sound like a walrus or a...
Let me play that again.
Says you can get 12%. Dave Ramsey's lost his mind.
That's closer.
And,
right.
Anyway, Dave Ramsey, you know what? I want to record that. I'm just going to play that every show.
I knew you were. You had.
Says you can get 12%. Dave Ramsey's lost his mind.
You had the baby thing, a couple of weeks ago. Grandpa.
Dave Ramsey's lost his mind.
Gosh, I love it so much.
I think actually, if you listen carefully to that, he's saying
play it backward.
Paul is dead. I think but you
have
have to
no.
slow it
When
down.
you play it backward, which I did, when you play it backward, it says everything I said is a lie. Fee-only financial advice is better. But you can't say that.
You can't say. He'll kill his whole program.
The SmartVestor program, which, by the way, he still has the endorsed local providers for real estate and insurance, but he can't. But he changed it to the SmartVestor program, and I'll talk about that another time. What I want to talk about today, though, is his advice on investing.
Yes,
his advice is it's just incredible. Put all of your money in stock mutual funds.
Okay, let me stop right there. Let me stop right there very quickly.
All right. We'll take it apart piece by piece.
Number one, we know almost nobody. I think we have, out of our 800 client households we work with, there are 3 or 4 people that are 100% in stocks. And that
everybody should be 100% in stocks.
The problem is, he's right, But in practice, nobody can do it. In other words, very few people can see their money go down by 50% and say, that's okay, it's always come back, right? And you know this because we get up in front of rooms and we ask people, how many of you are okay with losing half your money knowing that it's always come back? And there's never a hand that goes up, never a one.
Never, ever, ever.
No, so nobody can really, that's not very practical advice. Let's put it that way.
All right, well, here's his advice. He gives you specific advice.
Yes, he does.
On how to build the portfolio. The portfolio should be made up of, are you ready?
Yeah.
One growth fund, one growth and income fund, which is just a blue chip growth fund, one aggressive growth fund, and one international fund. Why does he use that terminology for the funds? Do you know why, Tom?
Because those
aren't
back to like
normal
1960s
asset classes
or something.
Yeah,
Nobody talks about them that way anymore.
Except the American Funds Group.
That's true. They still do, don't they? Yeah.
And it's the American Funds Group that Dave Ramsey is always promoting because he is personally in them, and they have, by the way, done quite well.
And he's not just in them. He's, according to listening to the clip, millions and millions and millions of dollars in them.
Well, the benefit to him being millions and millions and millions of dollars into them is that if you have millions and millions of dollars in the American funds, you can get what are called break points.
Yeah.
And so he probably paid commissions of nothing. Whereas the people he's sending to one of his formerly endorsed local providers are charging 5 3/4% to get their money put in. That's the problem, or one of the problems.
Okay, there's the operating expense of the funds as well. You can buy the same asset class group of stocks at Vanguard for far less money than you're going to spend at American funds.
Yes, but these certified financial Pharisees are going on and on and on and on and on and on about fees. All they care about is fees. They just talk about fees all the time.
He does say the fee thing. You really have that down now. I think that's going to be your new calling card. That's good. So no, he does complain about the fees, and he says it shouldn't matter because you're going to make 13% a year. What do you care about the fees?
That's
it don't matter,
thank you.
It don't
thank
matter.
you. Then he claims that because these funds have
past tense
returned about 12% per year, that you will, future tense, make 12% per year.
And what if you only made half of that? You'd be thrilled.
Oh, wow.
Come on.
And that's the other thing he said. Hey, let's say you only make half, 7%. Well,
Which is
half
never
of 12
gonna
is
happen.
6.
He also says, by the way, which is never going to happen because that never happens in the financial industry when something's doing so well and then does poorly. Are you kidding me? That happens Fidelity Magellan, you could go back through the track record of mutual funds that had a terrific period of performance and then dive into the bottom. Bill Gross. I mean, you can go through. There's a huge list of people, so that's a completely silly thing to say.
Dimensional Funds just came out with a new study that showed of those funds that were the top performers over a 20-year period, only 14% were still in business.
Yeah, in business,
20
still
years
operating.
later.
Yeah, I mean, come on, that's a silly thing for him to say.
Anyway, his advice on investing is just terrible.
Can you give us the World Cup call as part of it?
Go! Oh. I can't believe he did
sorry.
that. And
I know.
He hates, and by the way,
You can get 12%. Ramsey's lost his mind.
It does sound, actually, now that I listen to it closely, that he has lost his mind. I think that's right. Okay.
So, anyway,
the point of the
please
matter
do
is-
not take your financial advice from Dave Ramsey. What he's going to do, those
Investing
people he's
advice.
going to send
Investing
you
advice.
to, investing advice.
Yeah.
Those people he is going to send you to are stockbrokers. They are not one of them. I can say this because he doesn't even allow 100% fiduciaries to advertise with him. None of them are fiduciaries all the time. They are all brokers. They are all commissioned. They are all not required to do what is in your best interest. They will all sell you actively managed funds. And he goes on it in his rant.
He compares the being in the stock market to being in a bank. He says, in a bank, you're only making 1% for a CD. Well, first of all, we just talked about this on the show, you can now get 2%. But that aside, there is no comparison, ladies and gentlemen, between owning stocks and putting money in a bank and getting a small amount of interest. The risk, there is nothing similar, okay? And number two, and then in number 2, he says, and this is far better. This is as safe as the money in your house. Okay.
That I don't even know what that means, because your house may be safe or may not. We don't know.
Ask the people of Arizona or Florida or Las Vegas how safe their house was in 2007. It's not safe.
Then maybe he's being honest. Then it's as safe as the money in your house, which isn't safe. And yet he goes on to compare them to CDs at a bank.
Not a good comparison. So I can't make the sound the way you can. But I'm going to stick with what we've always said about Dave. Yes, Dave, you're right. Your overall advice to get out of debt, don't get in debt, etc., is great. But when you get into the details of investing, the advice is not great.
And for folks like Dave who think that for some reason we've got it in for him for selfish reasons, that somehow we're making more money by giving this advice, that's just ridiculous. If we were selling commissioned products
I'd rather
to people,
work for him and get the 5.75, get a piece of that.
If we were pulling in 5.75 on all the money we manage, wow.
That would be one big birthday party tomorrow, I guess, huh?
Yeah, man. We'd be investing millions in mutual funds instead of the thousands. Only the thousands that we can afford, because we don't get paid that well. 855-935-TALK is our phone number. That's 855-935-8255. That's enough of beating on Ramsey.
Now we have our new audio clip to play anytime we need to get going a little bit. There you do it.
He really deserves that.
After the break, let's talk about another radio financial guy who got some really great news this week. But is it great news for you, the investor? That's the question.
Oh, yeah, that is almost always the question, isn't it? 855-935-TALK. You need a little help with your dough? Give us a call right here on this show.
Tom and Don are talking real money.
We mention 855-935-TALK, 855-935-8255 throughout the podcast. But you need to know that you can call that number 24 hours a day, 7 days a week. Leave your question, and those will be answered in special Talking Real Money podcasts that will appear on this particular site in the future. So give us a call, 855-935-TALK, 855-935-8255.
For your real life and real future, Tom and Don are talking real money.
And once again, our number, 855-935-TALK, 855-935-8255. Now, folks, there are a lot of people. There are a lot of people on the radio giving advice on investing. There are thousands of them. And we are of the opinion that only a handful are giving what we believe to be honest, scientifically based, 100% fiduciary advice.
Arm's length advice is the other part, I'd say, because most of them, honestly, are on the radio because they want you to call Monday and become a client. Very few will say that, but it's pretty clear that it's a pitch.
So call us Monday, become a client. Oh, wait, I'm kidding. That was the wrong show.
Let me give you Don's cell phone number.
Yeah. There was a guy on the radio. He's still on the radio, but he was on the radio pitching financial products to people that he sent them on to his son's firm, and he got a huge kickback. I think it was like a 1% of every asset.
It was a lot. It was a big deal.
Yeah, and he got into some trouble with the SEC. His name is Ray Lucia.
Somebody that we know, we've met with. He's an acquaintance, I guess you put it that way.
He's an acquaintance. He's not a good friend.
No.
But I mean, Ray went on and on the last time I saw him about how he was ridden out of town on a rail.
Yeah,
he was unfairly prosecuted, that he didn't do anything wrong.
He was pitching timeshare or something last time we saw him.
He was pitching timeshare last time we saw him. Prior to that, though, he was pitching non-publicly traded REITs, a product with which we have many beefs.
The bonds on steroids, Don. We're going to write about this in the next edition of Real Investing Journal, because bonds are never good enough. You need to add something to them. Anyway, Ray got some good news.
Speaking of bonds. Speaking of bonds, do you know who says no one should own a single bond ever in their portfolio?
That's the guy we just...
no bonds.
Good luck with that. There's so few people that could do that, so...
Anyway, where was I going? Oh,
You're talking
Ray
about
Lucia.
Ray Lucia.
Yeah. Ray Lucia was all over the news this past week because...
Big.
Dude, he took his case, literally. He made a Supreme Court case out of it.
And
don't make a
won.
Supreme Court case out of this, and won.
I know. That's the part.
He didn't. Ray's a little confused. His lawyer told one of the financial advisory publications that he was totally cleared of any wrongdoing, and he was going to go back to practicing investment advice because he had to leave the industry forever.
I think most of us laymen who are not lawyers would say what we call a technicality, because what the Supreme Court said was that the SEC can't have people inside the building appointing their own judges, that those administrative law judges cannot try cases this way. That was the decision.
Yeah.
I mean, it had nothing to do with the merits of the case, which is my recollection. It came down to Ray was telling people, here's the returns you can expect. Then people said, where do you get that information from? Somebody took it to him, and he said, oh, I kind of wrote it out a few years ago. And
on a napkin.
On a napkin. And they're like, that's probably not good enough to give financial advice. I will always believe that because of the way he's pushed people into poor products, like you mentioned non-traded REITs, that helped bring him down. But all that aside, he got good news. Now the question really is what's going to happen next. His lawyers have said, puts kind of a brave face on it, says, hey, he's going to go right into business. I don't think the Securities and Exchange Commission is going to let that happen, but we shall see.
I think they're probably just going to bring new charges against him.
That would be my guess. That would be my guess.
So anyway, 855-935-TALK is our phone number, 855-935-8255. We have lines open for you. We will talk about the financial problems that you face, particularly the advice you get. If you, and you can take or leave our advice. You can take or leave everybody's advice.
Indeed.
But it's nice, isn't it nice, to have someone else, someone who has no vested interest in your situation, to tell you whether or not you are making the best possible decision for your situation. And if you've dealt with people in the financial industry, most of the time, they don't even know what your situation is. And
but they've got an idea for you.
That's the problem. So we want to clear up some of those ideas, clean up some of the messes, get you on a better direction, get you on a better course toward a really great future, help you retire better, help you build wealth for not just you, but for your family and on into the future. We'll be right back.
Tom and Don are talking real money.
All right, let's get this break out of the way really quickly. If you're looking for an investment advisor, you need a fee-only, 100% fiduciary, low-cost, science-based advisor. And that describes Vestory. If you'd like to learn more about us, it's really easy. Go to Vestory.com, Vestory.com, or give us a call at 800-386-3004, 800-386-3004. There, that wasn't so bad.
Radio for a really great future. We're talking real money.
And we want to talk about money with you, one-on-one, or you could just kind of listen in. 855-935-TALK is our phone number. That's 855-935-8255. Give us a call. And Jim, you're up. Welcome to Talking Real Money.
Hi, Jim. How can we help you today?
Yeah, I was listening to you guys a couple weeks ago, and some guy called in and had $20,000 he wanted to stick away somewhere, and you told him to put it in the bank. And I'm going to sell my house and have about $500,000 to stick somewhere, and I'm going to buy another house probably, but not for a year or so. Where do you think I should put that?
Well, that's a great question. I mean, the money is going to be used again in a year? Is that what you're saying?
Every bit of it is going back into another house?
Well, more than likely, I'm moving from Seattle down to L.A., and everything down there costs more. So
hard as that is to believe.
You are jumping from the frying pan right into the fire.
Oh, yeah.
I mean, so this is a pretty simple equation. If you need the money in a year, you don't want to put it in something where there's much volatility. In other words, if you put it in, just for sake of argument, in stocks, you could wake up a year from now and have half as much money there, right? I mean, that's happened. If you put it even in short-term government bonds, you could go down a little bit. If you used short-term corporate bonds, you could lose a little bit. What Don was simply saying is, just so if you want to know absolutely the money's going to be there a year from now, the bank is the right place. I think we did look at bank rate last week, Don, and you could get
we did.
CD for what?
2.3% right now at Capital One or at Goldman Sachs.
You'd simply go to bankrate.com.
No, wait, 2.5.
Oh, wow, for a 1 year?
1 year.
Wow.
$1,000 minimum at Able Banking, which is part of Northeast Bank. So,
I mean,
there you go. To me, that's a no-brainer.
Yep.
It's for absolute, no doubt about it. Sure, you cannot lose the money.
You'll have it in a year and be ready to make your purchase somewhere very east of Los Angeles for $500,000.
Well, I figure that would be a down payment.
Yeah, exactly.
Fair enough.
Yeah.
I was saying somewhere east, like the Mojave maybe or something. I'm kidding you.
You'll have $500,000 plus an additional $2,500 or so.
Right, yeah. Well, less than that, 2% of 5.
2.5.
Pardon me. So more like
1,200, 1,500,
yeah,
1,250.
So a little bit,
yeah.
but as Don said, the money will be there. I hope that helps, and good luck in your move.
All right.
Thanks for the call, Jim.
Thank you.
All right, take care, sir. Bye-bye. 855-935-TALK. That's our phone number. Anytime you want to stop by, we're here and trying our darndest to help this
Unless
process.
You're friends with Dave Ramsey, and he can guarantee you'll get the 12% the next year. Guarantee? No, he doesn't say that. But
I just think
he makes it sound
basically
like that.
he implies it.
Yeah, he makes it sound like, that's easy. You just put it in.
And in a tweet storm he had with somebody, with a couple of very well-known financial advisors, he said, "I help more people in 10 minutes than you help in a lifetime."
This is one of my problem with discourse today. Instead of answering the conflict, they start saying, "Well, you're an idiot." They don't answer the conflict. They simply try to put you down. That's not debate, by the way.
No, and as a matter of fact, a lot of people, I love this thing where it's like, yeah, I did something wrong, but everybody else does things wrong too.
What does that have to do with it? Yeah,
darn thing. Dave cannot, honestly, he cannot defend his position in a straight-on argument. There was one blog by an advisor that I read where he said he actually sat down with his clients. He did a Monte Carlo, Tom, where he looked at the actual returns for the market since 1926, which, by the way, the total global market actually outperformed Investment Company of America
at less risk, far less risk, because you own a lot more stocks.
But here's what this guy did: is he ran this for every year since 1926, and he found Dave Ramsey said you can afford to take 8% out and have 4% inflation. You can afford, So he ran the numbers, and he said if you take that much out with 3% inflation, you will go broke half the time.
See, and this is the other thing. It's easy for
Dave
to say this kind of thing because he doesn't work with people one-off. In other words, he never has to wake up have somebody call him in 10 years and say, "Dave, I ran out of money." Okay, line 2, you're on the air, so it doesn't matter.
No fiduciary responsibility to any of his listeners, none whatsoever. You have no recourse. If an advisor, a fee-only advisor gives you advice, you have recourse because they're a fiduciary. 855-935-TALK.
Tom and Don are talking real money.
If you need help allocating your retirement plan at work, you can get free help at 401-411.com. That's 401-411.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And we are doing just that at our handy-dandy phone number, 855-935-TALK, 855-935-8255. And, Tom, just for the heck of it, I went into Dave's SmartVestor website and gave him my information.
You can ask for somebody to help you write. And I don't know if they're an advisor, but okay.
Every one of them is dual registered.
And which means what? What does that mean?
Dual registered means that they, at some time, this is why I invented the hats. The advisor hats, the advocate hats.
Fast-selling caps that
we've sold a pair
right off of the
shelves. Two.
So
they come as a set.
More USA Men's World Cup shirts sold than the caps. Come on.
Oh, are there men's World Cup shirts?
Oh yeah, I'm wearing one right now.
Anyway, every one of them is both a registered investment advisor or advisor representative. And they are brokers working for a broker-dealer, which means at one point they can give you fiduciary advice, and then at the next moment they can sell you something that's merely suitable, which is what happens when they sell you an actively managed fund with a load. It's merely suitable. 855-935-TALK, our number, 855-935-8255. Larry, you're next. Welcome to the show.
Hi, Larry.
Oh, thank you. I've almost lost my confidence in indexing. What in the world is a Dow 30? I can understand why they dumped General Motors, but then they pick up Walgreen Drug.
Hey, you're breaking into one of the stories we wanted to get to.
Yeah,
I think this is absolutely
they dropped General
brilliant.
Electric. Yeah, General Motors went a long time ago.
And they dropped AT&T a few years ago and brought in Apple.
Years ago.
By the way, there's a great piece, and I agree with you, and we're going to let Don go off here because Don doesn't think anybody should pay attention to the Dow 30. But here's something interesting. We're on the same team. Here's something interesting. A lot of stocks have had a terrific track record after getting booted. No, I mean, there was a great piece in the Wall Street. Alcoa went up almost 100% the next year after getting thrown out. And the people that select this is no different to me, Don, than somebody selecting an actively managed mutual fund. It's the same. There is no rhyme or reason for these companies that are in the Dow 30.
Really?
You only been saying this for like 10 years
thing.
or 20 years or whatever it is.
Really? The Dow Jones Industrial Average, which is 30 stocks.
Yeah.
It's 100 and, X number of years old, started in 1890, I believe. And it is an actively managed index.
That's all it is.
Which is an oxymoron.
You're exactly right, Larry. There's no reason to pay attention to it. The problem is, because it's been out there. Yeah, it's been out there for 100 and whatever years. The financial media thinks you got to quote the Dow 30 because it's the Dow 30. These are the 30 most important stocks. And it's not by the way, the weighting of it. You know how they do this? It's fascinating. Nope. It's not cap weighted. It's price weighted. So if your stock is trading at 1,500, that's, worth 10 times more than somebody trading at 150. That makes no sense. None. It should be cap weighted, maybe like the S&P 500. I mean, this is really, the more I got into this, Don, the more I thought I should have listened to Don 15 years ago. I guess there's a lot of other things I should have listened to about 15 years ago.
I have been saying this for as long as I have been on the radio. And as a matter of fact, when I do my morning reports on Como, I do often say things like the centenarian Dow 30 or the archaic Dow 30 or the antique Dow 30.
Right.
It should not be. As a matter of fact, if you want a reasonable, and I try to quote it every single report, the best indicator of the U.S. market's activity at any given moment is the Standard & Poor's Total Market Index. The symbol for that is SPTMI. I think everyone should pay attention to that if you want to know what the U.S. market is doing, not the Dow. The Dow is not the market. It never will be the market. It ought to be forgotten. We are just creatures of habit, and we can't break the habit. If I took it out of those reports, do you know how many people would have a fit?
Yeah.
Because I didn't quote the stupid Dow?
Management
and
here
sometimes I call it the stupid Dow.
Yeah, really.
It's the
Larry,
stupid Dow.
You're right on. And isn't there DWG? Can't you follow that too for the Dow Global?
No, it's gone.
Oh, that's gone. Okay,
they killed it off because they didn't want people getting confused with the Dow 30, which, by the way, is owned by Standard & Poor's now anyway.
Yeah.
Standard & Poor's, kill it. Just put it out of its misery. Shoot it.
By the way, at the end of the article in the Wall Street Journal, they even admit To some investors and analysts, the trend suggests the index committee, they call it the index committee because it's the Dow Jones Industrial, behind the Dow Industrials has often mistimed its decisions, removing a company before it's fully had a chance to make a turnaround. The world is littered with mutual fund managers who've done the same thing for the last 80 years, have said, I'm giving up on Apple. Because you can remember when people gave up on Apple 15 years ago, right?
Oh, I remember it well. I was one of them.
Yeah, and they said, it's over.
Or Microsoft for several years.
Well, more than a decade. Microsoft it was in negative territory for a decade, even with the huge dividend. So, Larry, you're exactly right. So we're agreeing with you, and we thank you for the call.
Silly Dow. It's so silly. I'd love to see it put out of its misery and our misery. Mm-hmm. Please, Standard & Poor's, let's start talking about the market as the Standard & Poor's Total Market Index. That is the U.S. market. You know, I'm okay if you want to quote the Euro Dow or you want to quote the Asia Dow or the Global Dow. They're blue chips, but they're a little broader. But even the folks who run the Dow, the index committee or whatever they call themselves, they admit that they try to pick the stocks that'll make the index look best.
Only buy the stocks that are going up. Only buy the stocks that are going up. You don't buy the ones that go down. I mean, and so this is not a good measure. It's not a good, I don't even like calling it an index because it's not an index.
No, it's not because an index is supposed to represent a segment of the market or the market itself.
Yeah.
All this is a randomly selected
it's an actively
group
managed
of stocks.
Yeah.
It's the actively managed industrial average. And it isn't even industrial anymore.
No, Walgreens is very industrial.
As a matter of fact, I think General Electric was the last industrial company left in the Dow. I need to look that up now.
Okay, Boeing. I mean, come on. Boeing.
Boeing.
Boeing, that's pretty industrial. I mean,
but General Electric, for heaven's sake, Thomas Edison will be spinning in his grave.
Isn't Walt Disney industrial? Come on.
No, I'm kidding. Yeah, right. I'm going to Epcot tonight. I don't think I'm going to see a factory. I'll see a pretend factory.
How about Caterpillar? They make
Caterpillar. They're industrial.
Probably get away with that. But
Caterpillar's
the rest of them
still in it. I'm surprised Caterpillar's still in it.
Yep. They're one of the smaller ones. But the fact that they do it based on price, again, seems very silly to me and very archaic. Because
all right, I have the list
market
now.
cap is it's
Boeing. No. IBM, no. Intel, no. Johnson, no. You're right. That's it. Really is. DuPont.
Yeah, pardon me. Yes,
Dow DuPont. You can call that an industrial company.
Yeah, that's true.
United Technologies. I think at times you could call that an industrial. But remember, this was supposed to be set up to be just industrial.
Yeah.
Matter of fact, some of the original companies in the Dow are hysterical. It's like American Sugar and American Leather. There was a leather stock.
Yeah.
Whatever happened to all those leather stocks?
They went out like other things.
All right. 855-935-TALK is our phone number. 855-935-8255.
Good news, the Germans have won, and they will advance to the next round. So you feel better now about putting my team down?
No, not really.
Okay.
Not really.
Your team's advancing, too, so there you go.
They're not my team anymore. I feel terrible. 855-935-TALK is the number. Give us a call.
Tom and Don are talking real money.
Keeping the podcast breaks as painless as possible is my goal. That's why I want to very quickly tell you about the only magazine I've ever heard of that is 100% real investing all the time. There's no business news, no speculative advice, and certainly no lifestyle stuff. It's called Real Investing Journal. I publish it every quarter, and you can get 2 full years for only $25 at realinvestingjournal.com. That's realinvestingjournal.com.
For your real life and real future, Tom and Don are talking real money.
And if you want to enjoy a really great retirement, you need to invest well, you need to plan well, you need to take care of some of the things that might impact your family and your future. And you can find out how to do a lot of those things at a retirement event coming up really soon. Tom and attorney Rick Gregorick will be getting together, and you can get tickets right now at TalkingRealMoney.com, TalkingRealMoney.com.
We hope you realize that the information information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?